Hi everyone, welcome to today's video. So today we are going to speak about IRCTC. Now this is a very interesting stock because I get super interesting arguments as to why people are buying or selling IRCTC. Usually the argument in terms of buying is that, hey Akshat, IRCTC is a monopoly stock because Indian government runs the trains, and as more and more people take the trains and avail their services, the more this stock will grow. No competition, constant growth rate. So what can go wrong with this stock? Let's jump in and buy it. And that's what happens on this stock, that people buy it. When any type of lockdown happens or any type of news driven event happens, the stock falls massively. This is a very interesting monopoly stock that is completely news driven. Why do I say news driven? Because you might have seen that when IRCTC moves upwards, there is constant circuit that it hits. When it falls down, again, there are constant lower end circuits that it hits. It's a circuit share. Once you get stuck in it, you will get stuck in it. So it's very important for you to understand the fundamentals. So please watch this video till the very end. Please understand technical arguments. Please understand fundamental arguments. Then make a bet on this stock. Because if you get stuck with this stock at a wrong time, I'm telling you, you will lose insane amount of money. You might struggle to even sell this stock. So let me start with the technical analysis and let me tell you whether or not I'll be buying this stock on Monday from a technical perspective or not. Okay. So let's jump in. Let me take you to my screen and let me show you some important points. So the first thing that you need to notice is that this stock has been in constant uptrend. Okay. So uptrend means that you see these Knoxville divergence line. This is an uptrend line. This is an uptrend line, uptrend, 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 right? So basically this is an uptrend line. So it is a stock. Since the time of its listing, it has been generally going up. There has been no indication of this stock going down, right? Is this a good thing? Bad thing? We will comment. When I take you through the shareholding pattern of this stock, you will understand this point more. Okay. So this is the first key thing. Number two thing that you need to notice from this chart is that this is a circuit stock, right? Circuit stock. It means that when this stock moves up, it moves a lot, right? This is an uptrend. This is a massive uptrend, right? This again is a very big uptrend, right? Uptrend, right? Uptrend. You will see these type of uptrends on a weekly candle. So if you put the weekly candle, you will understand this. So what I'm trying to say is that when this stock goes up, it keeps on hitting circuit. Okay, so the things look hunky-dory when things are going well, but what happens when the stock corrects? So when it fell here, when it fell here, when it fell here, again, this was again a big dip. This was literally like you can start counting this dip from here. So there has been regions when it starts falling, it falls a lot. And this happens when it hits upper circuit also, and this happens when it hits lower circuit also. Very important for you to understand this, and I will take you through it. But right now, what is happening is that if you're just trying to ascertain whether to buy this stock immediately, so I'm shooting this video on Monday in early October. So should you be entering this stock right now? Because the stock is giving a massive run up. So should you be entering it now, right? The short answer is absolutely no. Okay. So you should not do it from a technical perspective. You should rather wait for the stock to correct and come back in case it come back to here. If it doesn't, leave it. Okay, no problem. We will wait for another correction. There is no point in getting stuck with this stock here, and if it falls a lot, then you will struggle. So my advice from a technical perspective is that please don't do this. Why am I advocating this strategy? I have shown it earlier. I showed it on yesterday's videos also around CAMs, where this particular strategy, what I'm talking about, it meets. Okay, so therefore we are going and buying that stock. But IRCTC, this strategy does not meet. So you should leave it. Okay, don't take a technical trade on it. Anything can happen in the world, but technicals tell us that this is a bad strategy for us to be buying this stock right now. There are no technical indicators that are forming right now. Okay. So from a technical side, absolutely zero sense in terms of buying this stock as of now. Now let's move on to fundamentals, because that is where the actual heart of the discussion lies. This is something that you need to understand, because sometimes what happens is that you take technical trades, you get stuck with those trades for 6 months, 8 months, up to a year also, and then you start panicking, because if the stock drops by 10%, 20%, 40%, then you will start fretting. For example, this is happening on Ujjivan Small Finance Bank. Now, am I selling that stock? Absolutely not. I'm quite confident that the stock will come up at certain stage, and it is completely okay for me to hold that stock right now at a certain loss. Why? Because I believe in the fundamentals of the company. It is okay. Whatever management related issues had to happen had already happened. Okay, so back to IRCTC. So let's start the business and financial analysis of IRCTC. So let me take you through a very quick overview of the company, because many a times we confuse what exactly it is where the IRCTC is making money. So it's a good idea to look at this product-wise breakup of IRCTC, right? So here if you take a look at it, then catering, right? That all the lunch, dinner, thali that you buy in the trains, that is catering business, right? And IRCTC makes money approximately 27% from it. These are the latest trends. IRCTC also makes a lot of money from internet ticketing, right? So when you buy tickets, IRCTC is making money. So these are the two major revenue drivers for IRCTC. These are also the profit drivers for IRCTC. We will take a look at it, but very important for you to understand a few key things here, right? One is that the business is highly concentrated on ticket sales. Now, as ticket sales happen, then only your catering service business will go up. Then only your rail neer business, which is the mineral water business, will pick up. So it's very important for the ticket selling to continue to happen, right? If this stops, then problems will happen. Now there is another important chart that I would want to show you. Now what this says is that if you take a look at the internet ticketing business, right? So we looked at that approximately 56-57% of IRCTC's revenue comes from ticket sales. But at the time of booking your ticket, you might have seen some ads, right? Or there are like cashbacks, loyalty programs, whatnot, right? So IRCTC makes money by partnering up with these organizations. This is important, therefore I'm bringing it up, right? There's like convenience fee that is charged, all that stuff, right? So basically, these are all markup revenues, So markup revenues means that, hey, I'm going and buying a ticket, but whatever additional stuff I'm watching on the website or paying convenience fees, etc., is additional money that IRCTC is making. When you are doing your job, you are getting a salary for it. But on Diwali, you might be getting a bonus. So that's good news. So similarly, IRCTC is also getting a bonus from you when you're using their website, bonus in the form that they go engage with different companies in terms of forming partnerships and bunch of different. Now, why am I telling you this? Very simple reason. First and foremost reason is that IRCTC is already exploring all avenues, or at least major avenues, for making money, right? This is very important for you to understand, because I'll talk about the valuation of the firm. That is the most critical part. You need to understand that these revenues are tried and tested. For example, where do you think all this new stuff of dynamic pricing has come up and catering has come up? It has come from airlines industries. In airlines industries, all the airlines literally try to squeeze money, right? Whatever money they can make from passengers. Baggage we will charge you extra, priority check-in we will charge you extra, this we will charge you extra, this and that. So essentially IRCTC has picked up all these different models of dynamic pricing and whatnot from airlines industry itself. It is already at an advanced stage of pricing its product, right? Super important for you to understand this, that from a pricing perspective, it's a mature company. It's not a starter anymore. So don't assume that, hey, because, IRCTC got listed just like 2 years ago, 3 years ago, therefore it's a very new company, it will learn how to make more revenues going forward. No, that argument does not apply to a company like IRCTC. Now, why am I telling you this? Now, the reason behind that is very fundamental, that the way the costing or pricing of your tickets will happen, how will it happen, right? When you take a look at airlines industries, what are they optimizing for? They are trying to maximize their revenues, right? Right? That is the goal with which they operate, right? Now they are in a competitive industry. You will buy the cheapest ticket, all that good stuff. So airlines have limited pricing power, but they will always operate with the goal of maximizing revenue. This is a very important point for you to understand and follow. Now, when it comes to IRCTC, what are they optimizing for? I would want you to comment in the comment section. I also get to understand if you are learning something from it or not. But please understand that IRCTC is not maximizing its revenue. That is not the goal. And this is a very, very important point. And this is the reason why I have been speaking for the last 2-3 minutes on this topic. That IRCTC is not in a game of maximizing revenues. They do not care about it. What they do is something called as a variant of cost plus pricing, right? Cost plus pricing. Cost plus pricing means that, for example, if this is me, right? I'm trying to book my tickets. So a lot of people comment that Akshat's drawing and Majnu Bhai's drawing is similar. Now, if you don't know who Majnu Bhai is, then please watch the movie Welcome. That's a very interesting, fascinating movie. Do watch it at your free time, but I'll continue to draw. Okay. So essentially, if this is me buying my ticket, right? Then what does IRCTC do? Or IRCTC's goal is very simple. That they are going to say that, you know what? to help Akshat book this ticket, take the entire journey, if it is costing us 500 rupees, then we are going to max charge 750 rupees. That is what we are doing. We are doing cost plus pricing. That is the goal with which we are operating. Why? Because even in India, do away with the debate of charging poor people, right? That of course we can't do. We have trains like Garib Rath, etc., which offer great prices in terms of travel. So IRCTC is a government-owned entity and they cannot charge massive amount of money from rich people. They cannot be like Apple, right? That what? Akshat has bought 3 Apple computers. Guess what? We are going to charge him even more money when he buys his 4th Apple computer. And I, like an idiot, will have to buy it because I'm stuck with the Apple ecosystem. So bottom line is that unlike brands like Apple, which can keep on increasing their prices for their existing customer base, IRCTC, even to their premium customers, can only do cost plus pricing. This is super important for you. This is the first key takeaway. The second key takeaway, that IRCTC is at a mature stage of their pricing. They have already explored numerous avenues to make money, right? So it's not as if that magically, like after 5 years, IRCTC will discover some gold mine to make more and more and more money. That is not going to happen because IRCTC is already experimenting with a lot of revenue streams. They have explored all the opportunities. Yes, some new trend comes, then IRCTC might get some money-making opportunity, but this will be low. Now, let me discuss a second and very important point here, and this will help you understand why IRCTC is a news-driven share. So let me take you through the shareholding of IRCTC. Now, this is what the shareholding pattern looks like, that mutual funds have very small investment in IRCTC, FIIs have very small investment. You have promoters 67.4, so I'll help you understand who these promoters are, and retail investors have around 13.2%. So let us look at the specifics, right? So for example, if you take a look at promoters, then who are the Indian promoters? This is mostly central or state government. So approximately their shareholding is what? Their shareholding has been 67.4%. You will say, Akshat, did the government sell 20% of its equity? Yes, they had to because of the SEBI regulations that a promoter cannot have more than 75% holding. So the government has sold IRCTC stocks because they wanted to bring down their shareholding to a certain level and they are not selling anymore. Okay, so this is a very important point, that the government has the maximum shareholding here and the government will not sell its share every now and then. So that is the first key concept around shareholding pattern. The second key concept around shareholding pattern is that these non-institutions, especially individuals with less than 1 lakh investment, how many of them are owning shares of IRCTC? So 11.26%. This is massive. How much did I show you for mutual funds? 7.5. FII, DIIs, small holding. But retail investors like you and me are holding 11.2%. Okay, so now what's the important point here? Now these promoters, they don't sell their stocks. Now these mutual funds also are very stable. They don't often trade in their stocks. Similarly, FIIs, they don't sell their stocks. So who is it that is selling and buying these stocks? So it is essentially those 12% retail investors, right? Retail investors. Now every time some news comes that, hey, some good changes are being made by the government in the railway sector, all that stuff, stock price will move up. Why? Because these people are very eager to trade stocks. So they will start buying more of this stock. So the stock price will hit a upper circuit. Now if some bad news comes in the market, then what will happen? Then all these retail investors have very less patience. They will start selling the stock. So therefore you will start hitting lower circuits. So the point is, this literally becomes like a news-based stock. That's it, right? Why? Because I had explained you a concept earlier that the supply curve is upward sloping and demand curve is downward sloping, and wherever these meet, this dictates the price. Now these people are not selling their stock and these major investors are not selling their stocks at all, right? Almost 68% of the stock is locked in, right? No one is selling it because it's owned by the government. You have little bit of shares remaining and it keeps on going up and down, and supply and demand keeps on changing from that angle, and the price keeps on fluctuating and hitting upper and lower circuits. So this is a very important point for you to understand how is the stock price moving for a company like IRCTC. Now, because of this excessive trading, what has happened is that the PE ratio of this company has gone bonkers, right? It has literally gone bonkers. It is sitting at 204.53. I am the type of a person who would say that, hey, if the stock is like really good, if it has massive growth potential and even if it is commanding 200 PE, it is fine, not a problem. But the company should have massive growth potential and the stock price should not be overvalued, right? This is a very, very important point for you to understand. So let me help you understand very quickly whether the stock price is overvalued as per me or not. And I will do the same analysis that I did yesterday with CAM stock. I will do a discounted cash flow analysis. I will help you do a reverse DCF analysis and give my viewpoint on it. And also, people who have watched my yesterday's video, please comment, why am I doing a reverse DCF analysis of IRCTC? Comment your answer. It helps me understand that you are getting value out of my videos. So in order to do reverse DCF analysis, we have to look at the cash flow, right? And basically whether you do standalone or consolidated for IRCTC, it doesn't make any difference. So right now we are sitting at a cash flow of 170. Now what is free cash flow? Again comment. I have explained it on yesterday's video. So please do comment. I will love to read your answers, and I will also put my answer in the comment box in case you are not able to understand this. You can rewind the video and read my answer again and watch this video again. Okay. So March 2021, we have free cash flows of 170 for IRCTC. Okay. So we plug in 171, right? What is the discount rate that you should be expecting? At least 15%. What is the multiple that we will assign? We will assign a terminal multiple of not more than 25. That is an aggressive case scenario. So this gives us a growth rate of 47.5. Now, how do we estimate this? So we use rule of 72. So 72 divided by X gives number of years for anything to double. For example, if you are investing money in a FD at 6%, then roughly it will take you 12 years for your FD money to get doubled, right? That's the point. Now here, growth rate is 47.5. So if you divide 72 by 47.5, so let's assume like 1.5 years approximately. So let's assume 1.5 years, or rather let's be on the conservative side. Let's assume 2 years conservatively. And what does this 2 year means? It means that every 2 years IRCTC's cash flow should double. Okay, every 2 years. So let's take a look at that. Okay, so let's go and take a look at that if that is actually happening. Okay, so let's start from 2017, right? So did the cash flow double by March 2019? The answer is no. We were sitting at 306. Now in 2019, we were sitting at 445. Okay, let's go back, right? Let's look at 2015 or 2014, right? We were sitting at 22.85. Did it double by 2016? Yes, it doubled. But from 2016 to 2019, the growth has been slow, right? And we are not talking about pandemic. We are keeping that out completely. I'm just talking about the growth rate of the company in a stable period, which was 2016 to 2019. There was no major issues that the railway was facing per se. So this growth rate of 45% or doubling money every 2 years or doubling cash flows every 2 years with a company like IRCTC seems like a distant dream. It is super overvalued in my opinion. Therefore, even fundamentally, investing in this stock doesn't make any sense to me. Okay, so what are some important points that you must understand about IRCTC? So I'll start summarizing key points. Number one, technicals do not make sense to buy right now. Fundamentals also do not make sense to buy right now. Technicals might make sense to buy because this is a news-based stock. People can take the stock price of this to literally anything because only retail people or operators are trading in this who have formed a cartel and are just literally moving the prices. This is what is happening on the stock, to be honest. One very important point that you need to understand is that the main promoters are the government, right? And governments do not operate a company with the intent of growth or maximizing growth. They operate a company as a service, right? Take any company, right? For example, right now, if you say that, hey Akshat, which bank can I buy? Should I be buying Sarkari Bank? Yes, you should be buying Sarkari Bank. That's not a problem because these stocks are available at an attractive prices. It is completely okay. Even if these Sarkari banks do not become very big going ahead in the future, it's fine because you are buying an undervalued asset. But if you apply the same logic that, hey Akshat, on one hand, you are saying that go and buy Punjab National Bank or XYZ Sarkari Bank. On the flip side, you are saying that don't buy IRCTC. Both are government companies. Look at the price at which you are buying. That is the more important point or more important consideration here. I'm not saying that the stock is bad. Fundamentally, it makes sense. It's a monopoly stock. It will keep on going up. No problem about that. But right now, the downside is much higher compared to the upside. Final point is that because this is retailer-driven stock, no one knows. It does not have any head or leg. You might buy this stock tomorrow and make like chokas money on this. Excuse my Gujarati, but yes, people can make a lot of money in this also because we don't know how retail investors will behave. It is almost impossible to figure out how retail investors behave. No one can do it. Very, very complicated stuff. But in summary, from technical and fundamental perspective, really bad stock to buy. If you want to buy monopoly stocks, do check out my small case, which is in the comment section. You can figure out some really good companies, so do give it a. So thank you so much and I will see you the next time.